Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Israeli tanks are reportedly in the center of Rafah, clashing with Hamas. The White House says the deadly Sunday strike on an encampment was devastating, but will not affect arms shipments. South Africans head to the polls today to vote in the tightest election since Apartheid ended in 1994. We're live in Durban. And stocks and bonds sell off after stronger than expected May U.S. consumer confidence and hawkish remarks from the Fed's Neil Kashkari lower expectations for a rate cut. Well, good morning again, everybody. It's just gone 8 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. Let's get you caught up on how markets fared. Following on from Memorial Day, U.S. Markets were closed on Monday, but coming back yesterday with a risk-on bias. And you can see the Nasdaq broke through 17,000, stronger by the close, another record high. And guess what? Guess which stock is driving all those gains? Well, NVIDIA, no surprise there. That stock also reaching another record high, propelling some of the gains within the Nasdaq. Looking ahead, the S&P is seen opening up slightly weaker to the tune of about 0.3%. We are also digesting some of that hawkish commentary coming through from Neil Kashkari yesterday. In addition to that better than expected University of Michigan sentiment indicators. We'll get there in a moment. But then a lot of focus on treasuries as well yesterday. You can see today treasuries are up 1.6 basis points. But throughout the course of yesterday, we were up 8 basis points, namely because of weak 2-year and 5-year auctions. They tailed 1 basis point. So that had an impact on how fixed income was trading yesterday. And Brent, also in focus today, we are seeing a bit of a bid emerge for the energy complex. For once, some of the geopolitical developments in the region are actually being factored into where energy is trading. Today, Brent is up 0.2%. But I mentioned that University of Michigan indicator, and here you can see that we did see somewhat of a surprise rise in that indicator. Rising to 102 tells you that consumers, U.S. consumers, are feeling slightly more optimistic about the state of the U.S. economy. All right, let's go back and check in on how markets in Asia are faring. Avril Hong is in our Singapore studio standing by. Avril, what are you watching this morning?
Yeah, Joumanna, we're really seeing a bond sell-off in the Asia-Pacific as well. After the selling in those U.S. treasuries, no thanks to hawkish Fed speak, no thanks to that poor U.S. auction, we're seeing Australia kind of getting a double whammy after the CPI print unexpectedly quickened. So that selling on the 10-year, we're seeing on the yield a 16 basis point move. I think this is the worst since June 2023 that we've seen a move of this magnitude. The Japanese bonds also coming off, moving towards 1.08 on the 10-year, and on Aussie yen, the yen weakest against the Australian currency since, I think, 2013 it is. Now, let's flip the board because, as you can imagine, amid these higher U.S. yields, tech stocks in Asia are taking a beating. That's an added pressure for the stock of Samsung Electronics after we heard from its labor union saying that it will stage its first strike ever. And that is raising some concerns about production, especially as it's trying to catch up to some of its chip-making rivals. So this is what we're seeing in the Asia-Pacific today, Joumanna.
Avril, thank you so much for the overview. A bit of a break, a lot more red on the screen than we had in the U.S. yesterday. Now, turning to our main geopolitical story from overnight, Israeli tanks have reached the center of Rafah, a sign the military could be nearing its goal of taking full control of the city. Residents have been reporting clashes between Israeli and Hamas forces in the center of town, according to AFP. U.S. National Security Council Communications Advisor John Kirby says the White House does not support a major ground operation at Rafah, but has yet to see Israel cross President Biden's red line.
We don't support, we won't support a major ground operation in Rafah, and we've, again, been very consistent on that. And the president said that should that occur, then it might make him have to make different decisions in terms of support. We haven't seen that happen at this point.
Pretty clear words there from John Kirby. For more, let's bring in Ozan, Özkural, founder and managing partner at Tanto Capital, who joins me. Good morning to you. Good to have you with us. Look, let's just talk about the developments over the last 3 to 4 days in the region, because it really feels like there has been an intensification of violence on all fronts. We saw the attack on the Rafah encampment, the subsequent international condemnation that came through for Israel, of course, U.S. overnight saying that Israel haven't crossed the red line. In addition to that, you've still got Houthi attacks on vessels. You've got Iranian elections coming up. Uranium enrichment is still going on. There's a lot going on in the region right now. How significant do you think this moment is in history? I know it's a big question, but there is a lot going on.
I think it's a big question, but I think it's a fair question. I think this is a battle for the soul of the rules-based international world order that has been at play since the end of World War II. That's how consequential what's going on right now truly is. In one end, you have the Iranian elections. You have the potentially second JCPOA at play. No one really wants war and conflict in the region. But at the same time, we are all looking for a credible de-escalation process, an off-ramp, if you will, to climb down from what truly is a consequential time in history and also for the region. So it's risk on, in a way, but everyone is looking to find a credible solution. And I think they will look at the U.S. Much more so than before to try to understand what pathway they lay out.
Yeah, it's interesting you say that. We spoke to some analysts, or we have been speaking to analysts the last few days, especially, I think, after the Rafah attack over the weekend. People are saying that the only country at this point that can exercise some control or leverage over Israel is the United States. And now, in the last 24 hours, we've had commentary from the United States suggesting that Israel didn't cross the red line. I do wonder also how you think the calculus may change given there's a U.S. election coming up. And if there is a change in presidency and President Trump does come back again, what does that mean for the region?
Look, that's the trillion-dollar question for the whole world. And the whole world is watching to the extent that the traditional alliance structures and the world order that we have been living in since the end of World War II is changing. And this conflict is also very important within the context of the larger geostrategic battle that is going to be U.S. versus China. And the whole world is watching in terms of what does it mean to be under a U.S.-led system. So it's actually very consequential. I think the U.S. elections are one of the most consequential elections of recent history. It will have implications in terms of the transatlantic partnership. It will have implications in terms of the South China, East China Sea. And in a world where we seem to have pressed the pause button, if not the stop button, on the hyper-globalized world that we've been living in, the concepts of friendshoring, nearshoring, and regional powers are going to become more important. But all eyes are on White House.
People say that, looking over to another war that's still raging on, that President Putin is sitting, waiting for the possible return of President Trump because he senses that there will be less support or at least Republican interest in continuing to help Ukraine with their military efforts. How do you see a return of Trump affecting what happens in Ukraine?
Well, before we come to the return of Trump, let's just acknowledge the fact that the recent cabinet reshuffle that Putin has made really signals that he's in for the long haul, both to stay in power, but also for a prolonged war and conflict in the region. So time plays in Putin's favor to a certain extent. And again, the one variable that can change things is what kind of a stance will the U.S. take? Now, the prospective Trump presidency also brings with it the possibility that he will withdraw support from Ukraine, in which case they will have to negotiate. But of course, again, I go back to my previous point on Israel, Gaza, what is a credible off-ramp? To negotiate, both sides have to walk away with something that they can live with. And again, U.S. and White House will be a very important driver of that.
Let's bring it back to markets, because I think what is also interesting about this, and you saw me speaking about oil at the beginning of the show, there isn't a lot of geopolitical premium that's being priced into financial assets here, and there's still plenty of countries within the region that are seeing a significant amount of interest for investment, IPOs, et cetera, et cetera, et cetera. How does one factor in for the geopolitical premium at this point? Because the markets are not working in your favor.
That's a great question. And all investors have the memory of a goldfish, and I'll say that as an investor as well, given the long run. So everyone wants a reform story, everyone wants a growth story. I think the way to factor in geopolitical risk is going to be initially just to acknowledge that everything may change and to try to price that risk, which is going to be very dynamic. You talk about commodity prices, energy prices. The importance of energy security is going to be magnified over the next, I would say, 3 to 4 or 5 years. And it's just a matter of acknowledging that geopolitical risk exists. It will be dynamic. And the way that we used to price risk will no longer cut it.
And what's interesting is we are still in a very low volatility regime. So I guess some of those hedges are cheap if you want to put them on right now.
Correct.
Ozan, thank you so much for joining me here in Dubai. Wonderful to have you on our show. Ozan Özkural, the founder and managing partner at Tanto Capital Partners. Well, South Africans are voting today in an election seen as their country's most important in 30 years. One key battleground could determine whether the ruling party keeps its political majority. My co-anchor Jennifer Zabazajja joins us now from Durban, which is the capital of the most hotly contested province, KwaZulu-Natal. Jennifer, good to have you with us. Let me just start off. I mean, I know you've had a really busy week on the ground. You were in Cape Town earlier this week speaking to plenty of former policymakers and analysts about these upcoming elections. Do you get a sense that people are convinced that ANC can actually hang on to this overall majority, or is there some nervousness about what could happen?
You know, Joumanna, it's really split, and I think it really depends on who you speak to. And it was fascinating yesterday. One of our last conversations was with the African National Congress, the ruling party, the finance minister. His name is Enoch Godongwana, and he says he is quite confident that the ANC will be able to get that 50% majority. But a lot of the other investors, a lot of the political analysts that we spoke to say that it's going to be very difficult for the ANC. And that is just because if you take a look at what we've seen over the past 5 years and really 30 years that the ANC has been in power, we've seen this economy stall. We have seen unemployment grow. And we have seen the port and rail infrastructure power outages really putting a dent on any sort of economic growth. And you can feel that a lot of South Africans are frustrated by this. And so, as you mentioned, we are in Durban. Durban is one of the big, it's situated in one of the biggest provinces in South Africa, and that is KZN, KwaZulu-Natal, as you mentioned. It's home to a fifth of voters. And so it will really be one of the determining provinces to see, how voters respond. And the interesting thing about KZN, Joumanna, is that it's really split. We know that Jacob Zuma is from a part of the province, and he does have a lot of favorability. He does have a lot of popularity for his MK party, which is one of the smaller parties. But then we also know that, as one of the many economic hubs in South Africa, there's a lot of support for the ANC. There's a lot of sentimental support, as Enoch Godongwana told us. And so KZN, Durban more specifically, will be one to watch, as will be Gauteng, which of course is home to Johannesburg. And as you mentioned, of course, the Western Cape, which is home to Cape Town. So those are really going to be the key provinces that could potentially determine who does or doesn't come out on top in this election.
Yeah, and I was reading a report on the terminal about what those potential coalition configurations could look like, because if the ANC falls short of a majority, but only by a small margin, then they could partner up with one of the smaller parties. But if they lose by a big margin, then they'd have to partner up with some of the more, policy radicalist parties that you talk about. So very interesting to see what happens there. Jennifer, thank you so much for your coverage in the run-up to these elections. That was Bloomberg's Jennifer Zabazajja. Well, still ahead, time is running out on BHP's ambitious $49 billion takeover plan for Anglo American. More on the Aussie miners' bid later in the hour. But up next, hear why Aditum Investment Management expects 3 potential rate cuts starting in the second half of the year for 2024. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Minneapolis Fed President Neel Kashkari says the U.S. central bank's policy stance is restrictive, but policymakers haven't entirely ruled out additional interest rate increases. Let's bring in Omer Chowdhry, Head of Global Fixed Income and Multi-Asset Strategies at Aditum Investment Management. Good morning to you. Good to have you with us. Interesting that Kashkari, also notable hawk, is saying that they haven't ruled out the possibility of a rate hike, even though I think the chairman, Fed Powell, was pretty adamant that rate hikes were not something that they could foresee happening. Yeah. Let me just start off by asking you what you're anticipating the Fed to do the rest of this year.
Well, in terms of rate hikes, we think that's probably not going to happen. That's off the table.
Yeah.
Neil Kashkari, obviously a very smart man, but he's kind of on the conservative side. And, Powell laid out the fact that, okay, they're somewhat happy with the path of inflation. Inflation stalled for the first quarter of this year, maybe because of loosening of financial conditions last year. We think that reverses. And we think that about 2 to 3 rate cuts are probably in the cards starting second half of this year. And that might be catalyzed by the fact that we're going into a weaker employment market. If you look under the hood of the employment market, the headline numbers have been printing strongly, except for the last print. But the unemployment rate did tick to 3.9% in the last report. I think the Fed's equilibrium level is about 4 to 4.1.
Yeah.
That could start catalyzing a couple of cuts. And if we're sufficiently restricted, they might want to move away from that in order to lessen economic damage down the line.
And slowly start getting to where they need to be.
Yeah.
Let me just ask you a question, wearing your fixed income hat. I thought it was interesting yesterday that these 2-year and 5-year Treasury auctions in the U.S. tailed. That was a catalyst for fixed income to move higher. We had quite a big sell-off yesterday, 7-8 basis points. What is it about where these yields are trading that is not appealing to investors? I would have thought they'd be licking their lips and jumping into buying fixed income here.
We are kind of licking our lips, to be honest. We think that the risk to reward is favorable to get into fixed income. I think the market is quite nervous about the macro. They're quite reactive to every economic data print that comes out. And we got some strong PMIs, yields spiked up. We get a weekly report, yields drop down pretty drastically.
Yeah.
So I think that the latest piece of economic data that came out is kind of spooking investors again that, the Fed might actually be on hold for a little longer than anticipated. They might wait for better levels. We're not in that camp necessarily. We're not leaning into fixing them fully. We are overweight, but we're slowly adding positions, especially on the longer end of the curve.
Yeah. What's the old adage? Don't fight the Fed, though. If they're telling you they're not going to be in a rush to cut rates, then it may be a tricky trade to hold on to.
Yeah, it is, but you kind of have to preempt that a little bit, right? So by the time they actually get to cutting rates, you might be a bit too late to the game. So you have to position yourself.
Yeah. How much do you worry about the fiscal premium right now in the U.S. Treasury curve?
Look, that is something that we watch. Obviously, the fiscal deficits is going to be a problem time and time again. There's going to be a lot of printing and weakening of the dollar that comes down the line in the longer term. We think that, the Federal Reserve has come out and the Treasury saying that they don't want interest rates to go much higher because the cost of borrowing is becoming prohibitive to them as well. Which force wins in the end, I'm not really sure, but that is a worry that we keep in the back of our minds.
Yeah, I think for many
But I think that the
investors as well.
overall macro will be more important, so where inflation and employment goes, at least for the short to medium term.
Yeah. Question about credit. I was having a look this morning just on the terminal. I was, sort of typing away. CDX spreads struck me as really tight. Same for high yield. It just feels like credit is trading extremely tight in this environment. Given where credit is, would you rather just own duration outright and U.S. Treasuries over credit?
So we are owning U.S. Treasuries, but also high-quality credit, which is a Treasury proxy on the longer end of the curve. Credit spreads are very tight, even in EM, in U.S., across high yield, across IG. They're trading at some of the tightest levels we've seen in a while.
Yeah.
That's due to probably there's still a lot of liquidity out there. The global economy hasn't fallen off a cliff. U.S. is still chugging along quite well, so people are taking on that risk. On the overall yield level, it's very attractive, so that actually causes spreads to actually tighten or remain tight for a while. We do think they're tight. We're not adding massively on credit, but, I don't see any credit spread widening event on the horizon yet. If it does happen, it'll be quick, and I think that'll be a chance to add more to credit positions.
Yeah, keeping an eye on local markets. I saw Saudi issued a 5-year sukuk yesterday for the first time since January. How are you thinking about local fixed income markets here?
So EM has been GCC has been a relative safe haven within the EM space due to not only elevated oil prices, but, significant improvement in the fiscal and external positions of government, handling of COVID really well. The region is kind of booming. There's a lot of growth prospects. We're still positive on the region, obviously. We don't think that's real anytime soon. But, again, valuation is quite stretched out. It's quite expensive. We find pockets of value just here and there, nothing too attractive. But we think that, it could still remain a relative safe haven within EM. And we're actually quite still positive on UAE and Saudi.
Okay, angle. Interesting place to leave it, especially because so much of our show, we talk about the geopolitical events that are happening in the region, and then here's a fixed income investor essentially telling us that it is a place that you want to be and a relative safe haven space in EM.
So on the geopolitical front, we're watching all the events like everyone else, obviously. We haven't seen any significant geopolitical risk premium being priced from a credit point of view. to our surprise, actually. Should that change, that might change our view and how we look at it. But so far, it's remained pretty well intact because the fundamental story is pretty strong.
Yeah.
And if the thing spills over quite drastically, that might be a bit of a problem. But
yeah. Omer, great stuff. I believe this was your first time on TV,
yeah.
so that was a great start. Thank you for joining us on our show today. Omer Chowdhry, Head of Global Fixed Income and Multi-Asset Strategies at Aditum Investment Management. And also coming up, our exclusive interview with YouTube CEO Neil Mohan about transforming the platform into the world's biggest streamer. This is Bloomberg.
You know, YouTube's really kind of its own sort of unique thing. We're not a social media platform. We're not traditional media in the sense we're not linear television. We're really sort of our own thing. And so if we live up to that vision, we think we're really still in the early days of our growth story and fulfilling what our mission is, which is to give everyone a voice and show them the world.
Based on Nielsen's latest data, YouTube is now by far the biggest streamer in the world. Netflix close behind, and then everybody else drops way down. Hulu, Disney, Max. But you don't get the awards or the critical acclaim. What more does YouTube have to prove?
I do think that YouTube is getting recognized as that platform on television screens. We just surpassed 1 billion hours of watch time on living room screens. And you mentioned the Nielsen ratings. That is certainly something that when I speak to our advertising partners, the brands that look to build connections with consumers on our platform, they recognize that. And they see it as a place not just of this broad reach, you know, the #1 streaming platform here in the US, but also reach that is engaged. And from a brand's perspective, that is something that they are really recognizing. Like I said, it's still the early days of our journey, but I do start to hear that more and more from our partners.
YouTube is printing money for Google, as I understand it, upwards of $15 billion a year. Where will the future revenue growth come from? Talk to us about that strategy and how it will play in.
If you think about YouTube today compared to what YouTube was 5 years ago or certainly 10 years ago, there are an order of magnitude more creators on our platform. We have a breadth of monetization offerings to support this creator economy, not just ads, but subscription business. You know, that was the $15 billion subscription business across all of Google, but also direct to fan funding, like channel memberships and things like that. So there's an enormous amount of scale and complexity in the ecosystem that requires us to rethink how we're going to support that creator ecosystem.
Well, you can see Emily Chang's full conversation with YouTube CEO on Bloomberg Originals. We'll be back in a moment. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Israeli tanks are reportedly in the center of Rafah, clashing with Hamas. The White House says the deadly Sunday strike on an encampment was devastating, but won't affect arms shipments. South Africans head to the polls today to vote in the tightest election since apartheid ended in 1994. And stocks and bonds sell off after stronger than expected May U.S. consumer confidence and hawkish remarks from the Fed's Neil Kashkari lower expectations for a rate cut. Well, it's just gone 8:30 a.m. across the Emirates. I'm Joumanna Bercetche in Dubai. Let's get a check on markets. U.S. stock markets coming back from that bank holiday on Monday, and the picture was pretty positive across the board. NASDAQ in focus up 0.6% by the end of the session, breaking through 17,000 to the upside, led by one stock, that is NVIDIA, also reaching a new record high, and really does tell you about how AI is still powering a lot of the performance in U.S. stocks. S&P futures leaning towards a negative open today, down about 0.3%. U.S. Treasury is also in focus, and you can see today we're about 1 basis point higher. But yesterday we did have slightly weaker than expected 2-year and 5-year auctions, which meant that the curve bear steepened, i.e. we saw yields move higher, but the long end of the curve moved a lot higher than the front end. 10-year yields were up about 8 basis points in yesterday's session. And then Brent in focus this morning, seeing a bit of green on the board there, up 0.2% as some of the geopolitics of the region get priced in to energy, which by and large has been shrugging off a lot of those geopolitical concerns. Our main chart today, we're taking a look at the University of Michigan sentiment indicator. This was an interesting one that came out yesterday because it did tell you that U.S. consumers are beginning to look up. We saw a bit of a surprise jump in terms of that sentiment indicator. One of the reasons, of course, that the market reacted hawkishly to the data that came through in conjunction with those comments out of Neil Kashkari, which also were interpreted hawkishly. But let's check in on how markets in Asia are faring. Avril is in our Singapore studio standing by. Avril, what are you watching today?
Yeah, we're watching those hawkish signals out of the U.S. and how that really hit U.S. treasuries, those higher yields putting pressure on Asian equities. It is risk-off across the region, declines from Tokyo to Sydney. The Asia stock benchmark losing by the most in more than a month. And Australia bonds getting particularly hard hit. Take a look at the 10-year, 15 basis point move there. I think this is the worst since June 2023. And this is against the backdrop of Australia's CPI numbers accelerating, bucking expectations of a deceleration, a moderation. Let's flip the board because I wanted to talk you through some of the dynamics at play between the central banks. Swap traders now pricing in a hike from the RBA later this year, never mind a rate cut. And given how there's really no alternative for yen as the carry trade, we're seeing on Aussie yen highest since 2013. Offshore yuan, onshore yuan also weakening there against the greenback on the onshore rate. Weaker since November last year after the PBOC signals to the market that maybe it's okay with letting the currency weaken, Joumanna.
Avril, thank you so much. Now, Israeli tanks have reached the center of Rafah, a sign that the military could be nearing its goal of taking full control of the city. Residents have been reporting clashes between Israeli and Hamas forces in the center of town. For more, let's bring in Dana Khresh, our Dubai bureau chief. Well, the offensive in Rafah appears to be continuing.
Yes, we saw several witnesses to media outlets yesterday saying that Israeli tanks have reached the center of Rafah. We have from our own original reporting an Israeli official saying, yes, they are, but they are part of what they said was a limited, precise operation still. Yesterday, we saw shelling on another camp in Rafah that Hamas blamed Israel for, but it doesn't seem that Israel had done it. So there are conflicting reports on the ground. Now, on the Sunday strike that killed at least 45 people in a displacement camp there, which Prime Minister Benjamin Netanyahu called a tragic mistake. An investigation, an Israeli investigation into the incidents is saying that the ammunition used could not have caused that massive of a blaze. And they're saying that they're looking into other possibilities, including whether there was a weapons depot nearby that could have caused that blaze.
And of course, those comments seem to assuage the U.S. that the Israeli attack on Rafah, the secondary blaze, as they called it, was not intentional, and therefore, in their eyes, no red line has been crossed. That's quite significant.
Yes, it is. The U.S. yesterday said that the strike on Sunday will not change the policy as it stands now. There won't be any stopping of weapons shipments that they had done before, and they're saying that they still believe that Israel is conducting a limited operation in Rafah, and that's what it seems right now. But if Israel deploys more troops, then that could be very alarming, and that could indicate that Israel is definitely going ahead with its original plan, which is to go into Rafah.
Of a full ground offensive.
Yeah, boots on the ground.
Dana, thank you very much for the overview. Dubai Bureau Chief Dana Khresh. Now, South Africans head to the polls today to vote in the most hotly contested election in 30 years. The Finance Minister, Ina Gonongawana, has told Bloomberg TV he is confident the ANC will get over the line.
We are going to have more than 50% outcome of these elections. I'm quite confident.
Why are you confident about that?
It's because of the work we've been doing. I know there have been a number of polls which suggest that we may go below the 50% mark. I must say my own view is that they're largely ideological driven, first and foremost. Secondly, people are basing their results and their savings on the basis of the outcome of the local government elections.
But Minister, they're also taking a look at the economy. Since the ANC has been in power, growth has stalled. There's more people unemployed. So why then?
No, that's inaccurate.
Oh, okay. Then tell me what the outcome of, or what the economy looks like right now.
This notion of saying since ANC has been in power, there's been no growth. The greatest growth records for 40 years ever recorded in South Africa was during Thabo Mbeki's time, when the economy grew almost, on average, about 4%. So it's incorrect to say during our ANC's term there's never been growth.
What about the past 5 years, though?
Okay, I'm going to come back. There's been a number of challenges over the past 5 years. First, there's been COVID, which did a lot of damage to the economy. And secondly, there have been a number of other challenges, including disasters and so on. And again, there's been the perennial problem of electricity and logistics. That I accept.
That was South African Finance Minister Enoch Godongwana speaking to my co-anchor Jennifer Zabazaja in Cape Town. Well, there are just hours left on the clock for Australian mining giant BHP to convince Anglo American on its ambitious $49 billion acquisition plan. The deadline to salvage the deal expires at 5 p.m. in London today. For more, our commodities reporter Martin Ritchie joins us now from Shanghai. Martin, what are we hearing from the two sides at this point? Because the reports I've read of the last 24 hours suggest that there's still a lot of daylight still between what BHP wants and what Anglo American are asking for.
Yeah, a slight feeling of deja vu here, to be honest. A week ago was the previous deadline for BHP to make a formal bid or come up with an agreement with Anglo, but they got a deadline extension 1 week, and we're here again waiting to see whether they do come up with some kind of deal or not. Look, the reporting that we have suggests that the two sides are still quite far apart in terms of coming to an agreement on this, and the sticking point, as it has been right from the beginning, is Anglo's South African assets, not South American. BHP has a fairly complex proposal in which it wants Anglo first to spin off two South African businesses, and then BHP would take over the rest. What we're hearing is that Anglo's saying, well, BHP, tell us how you're going to ease those concerns, how you're going to handle this. On the BHP side, we're hearing that they're saying Anglo really isn't describing what the problems are enough. So it doesn't look, as far as our reporting stood sort of late yesterday, it doesn't look like they're going to achieve a deal. But let's see what happens. The deadline is 5 p.m. in London today.
Yeah, it really does seem as though the divestment has become a major sticking point with those two South African assets of Anglo American. Where do we go from here if no agreement is reached? Will BHP, is it a possibility that they simply just walk away?
Of course, yeah. I think BHP really wants the acquiescence and the cooperation of the Anglo management and its shareholders with any deal, precisely because of the complexity involved here. It wants to be able to come up with a scheme that satisfies some of the concerns about the complexity. That might be by offering shareholders a little bit more money to cover the risks involved in this transaction, or coming up with some other specific proposals that deal with the concerns among Anglo shareholders. But BHP obviously could walk away from this deal, and it would have to look elsewhere to expand its copper portfolio. The copper in Anglo's business is really what BHP wants.
Exactly. That's the crown jewel at the end of the day, isn't it? With copper prices reaching a record high this year. Martin Ritchie, our commodities reporter, thank you for giving us the latest on this important deal story. Now, also coming up on our show, could Saudi Arabia's massive investments in global private equity start slowing down? We'll discuss Wall Street's concerns next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Well, Saudi Arabia is on a mission to reshape itself, and the kingdom is looking to the Public Investment Fund to lead that way. But its renewed domestic focus on projects like the $1.5 trillion NEOM development has raised global asset managers' concerns that a lot less cash will flow their way. For more, let's bring in Bloomberg's Matthew Martin, who is in Riyadh and has penned this story. Really interesting analysis going on here, Matthew. So thank you for joining us on the show to talk about it. From what we can glean, the PIF is looking to do more investment locally. What sort of impact is it going to have on global asset managers who in the past would have received money coming directly from PIF or PIF?
Good morning. Yeah, as you say, over the past 5 to 8 years, the PIF has really sort of transformed itself from this domestically focused entity. It became very, very outward focused. It gave billions and billions of dollars to some of the world's biggest asset managers. Most notably, of course, there was this $45 billion that went to SoftBank for the Vision Fund. But they've also been funding new private equity and infrastructure funds from the likes of BlackRock and Brookfield and General Atlantic, and all these big global fund managers have all come to Saudi Arabia, to the PIF, to raise money out of them. Now, what they're saying is that as we see the PIF taking a more concerted role in developing and funding a lot of Saudi Arabia's Vision 2030 projects inside the kingdom, that there's going to be less money that these big fund managers are going to get. And this is going to have a big impact, because this is a time, remember, when it's become very difficult for these managers to raise money. The rise in interest rates, high valuations, has meant that there's been less willingness to put billions of dollars into these big funds. So the Middle East has really been one of the key places where they've turned to try and raise money, and it now looks like that's going to be getting harder and harder to do out of Saudi Arabia.
Yeah. Well, Matt, I mean, it's interesting because it ties in so many different stories together. Number one is the huge spending outlays that Saudi Arabia are required to do in the next couple of years to honor Saudi 2030 vision, in addition to their ambition to bring in international FDI into the country. And you yourselves, the team at Bloomberg News have written stories about how that FDI hasn't matched up to their ambition. So to what extent is that constituting a backdrop for the PIF reallocation of funds here?
Well, I think this is a really key point here. If you are a big fund manager and you want to get money out of the PIF now, then you're going to have to convince them that you're going to do something for Saudi Arabia. Earlier on this year, we saw BlackRock got $5 billion out of the PIF, but that was all done on the basis that BlackRock would be putting a team of people inside Saudi Arabia to manage that money, and that money would be invested inside Saudi Arabia and in the region for the benefit of Saudi Arabia. So if you are a big fund manager and you want to raise money out of the Saudis now, then you need to be selling them. You need to be saying to them, what we're going to do for you with this money. And that, as you say, that fits into this FDI story. They want they want to change the narrative that there's always been around the country, where they make loads and loads of money from oil, and then they ship it abroad for somebody else to invest in the US or in Europe. Now they say, we still make a lot of money from oil, but we want to do things which are going to develop and diversify this country. We want you to help us manage it internally, and we want you to help us crowd in other investors rather than just shipping tens of billions of dollars abroad every year.
Yeah. One other story that I thought was interesting that I read about the last couple of days. So Alat, one of the units of the PIF, just made a $2 billion investment into Lenovo, which is interesting, right? And in light of what we're talking about these asset managers really finding it a lot more challenging to receive money from PIF, what does it tell you about where their strategic priorities are, given that they're looking to invest in the likes of Lenovo, which is, of course, Hong Kong listed?
Yeah, so I think this is an indication of this strategic shift that we are seeing from the PIF, where if they're going to use their money, then they want it to be for not to go into externally managed funds, and they want it to be direct private equity style investments that they control, and where they can pull more levers within the company they're investing in to get them to do something inside Saudi Arabia. And that's a key part of this Alat deal with Lenovo. Is Alat that has been set up to try and build an electronics manufacturing industry. So the money that they're giving to Lenovo, the quid pro quo related to that is that Lenovo are going to be coming to Saudi Arabia. They're going to be setting up a Middle East regional headquarters in Saudi Arabia, and they're also going to be manufacturing PCs and data center servers here as well. So it's another good example of the PIF using its money. If it has to go abroad, then it's going to be to do something that has this this domestic angle to it as well, and encourages more FDI and more crowding in of other investors inside into the country.
Yeah, so interesting. Well, the story is up on the Bloomberg terminal. I would highly recommend our viewers read it. That was Matthew Martin in Riyadh. Thank you. All right, let's get back into Middle East markets. The IPO scene is heating up once again in the Gulf as investors pile into Saudi listings. So joining me now is our equities reporter, Farah Al-Bahrawi. Good to have you back on the show again. Matt was just giving us an overview of sort of the PIF's strategic priorities from here, but we know the backdrop is it's been quite a healthy listing environment within Saudi Arabia.
Absolutely. There's just been listing after listing in Saudi Arabia, but what's interesting here is that the demand is absolutely massive. We had just for IPOs $176 billion of demand. That's exceeded the demand for Aramco's own listing, which is, of course, a record. So these listings include Fakih Hospital, Saudi Manpower, Rasan Information Technology, as well as Miyahana, which is a water treatment company. So while that looks positive at face value, what's really happening under face value is that investors are becoming a little bit more frustrated because these high, and we had someone call it inflated, oversubscription levels means that a lot of local and even international investors don't get the allocations that they're looking for. Exactly.
So that was going to be my next question, actually. You talk about super high demand on the books. How much of that is real demand versus inflated demands and there being a lack of regulatory oversight to how much real interest there is, if you whittle it down?
That's exactly it. So in the end of the day, investors are now getting accustomed to getting smaller allocations. So these listings are oversubscribed by several multiples, which just means that these numbers, to some extent, investors know that they won't get it because investors in the Gulf have adjusted to smaller allocations.
So what has the regulator been doing to try to modify that?
Well, I think that the regulator at the moment, Joumanna, is just focused on bringing more listings to the market, and that's the focus at the moment. So we heard over 50 companies coming from the Tadawul CEO.
Do you get the sense that some of the appetite for these IPOs has been impacted by the geopolitical events in the region?
So the market has been impacted. We can see across the Gulf, Saudi Arabia, Abu Dhabi, Dubai, Qatar, they've all been trading lower. They are trailing emerging market peers, which is unusual for our region here. So geopolitical geopolitical risk is weighing on the sentiment in the secondary market, but the primary market for the moment seems to continue to be healthy.
And what's interesting, we spoke about this yesterday, is that despite the IPO very strong listing environment, the Tadawul has underperformed, which tells you maybe a bit of substitution effect is going on because people would rather buy the primary listing.
That's exactly it. You have people pulling out their money from the market, holding on to it, wanting to invest in the primary market because there's a guaranteed return, 30% pop on the first day. We also have Aramco's secondary listing potentially coming soon. So investors know that they will need to have a lot of cash to not just have the high oversubscription levels, but to actually invest in those listings.
Excellent. Farah, thank you so much for the overview. Our local equities reporter, Farah Al-Bahrawi. Also coming up, nuclear energy is once again sparking debate in Japan. We'll have the latest in our big take next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joumanna Bercetche in Dubai. Well, the Japanese government is embarking on a major review of its energy strategy, with debate heating up over restarting its fleet of idle nuclear reactors that could include the world's biggest nuclear power plants. Now, for more, let's bring in Japan's energy reporter Shoko Ada. I find this discussion fascinating, Shoko, particularly in light of the Fukushima incident back in 2011. Since then, Japan has been scaling down their usage of nuclear facilities. Why is this conversation coming up again now?
Right, so there's been recent developments that point toward Kashiwazaki Kariwa potentially restarting again. The nation's regulator lifted a ban that prevented it from restarting last December, and since then the Trade Ministry, which oversees Japan's energy policy, has sent a high-ranking official to Niigata, where the power plant is located, to try to gain the local governor's understanding. And then on top of that, Tokyo Electric, which operates the power plant, has loaded the nuclear power plant, one of the units, with fuel, and as part of the restart inspections. And so there's been a lot of development pointing toward that this could potentially be moving forward.
And let me just ask you, why does the government want to be using more nuclear power?
So there's two main reasons why Japan wants to use nuclear power despite the 2011 disaster. And one is energy security. The invasion of Ukraine has really put into light just how resource-scant Japan is and how vulnerable it is from external shocks. When gas prices and coal prices shoot the roof, Japan gets influenced. And the other reason is climate change. Japan is very heavily reliant on fossil fuels, and they want to rely on more cleaner energy.
Great. Shoko Ada, thank you so much for that. Well, that wraps up our show today. This is Bloomberg Horizons Middle East and Africa. I'm Joumanna Bercetche.